Peloton shares surging this morning on pace for one of their best days on record, up more than 20%. Brandon Gomez here to explain why. Hey, Brandon.
Yeah, two big factors this morning. Look, strong quarter results and a new CEO announcement. The company back to generating free cash flow in its slow march to profitability. Break even on EPS, still a beat on the top and bottom line, though. There's been some debate from investors if Peloton could turn around its balance sheet after so much focus on just pushing its hardware. Now they're focused on profitability, not just getting bikes in homes. In fact, Peloton said they expect to lose more members and sell less bikes and treads during the holiday quarter. Interesting, given last week's announcement of a partnership with Costco. What's more, we learned about the company's new CEO, Peter Stern. Remember, former CEO Barry McCarthy stepped down in May with two board members stepping in as interim CEOs. So who is Peter Stern? Well, currently at Ford, he primarily oversees the company's subscription service business, was a co-founder of Apple's Fitness Plus offering. Real focused pick here from the company as it relies on recurring subscription revenue. Investors will need to wait and hear more about what the focus is going to be going forward, but clear focus here on building out and sustaining Peloton's connected fitness subs and app subscribers.
So they lost users. They're selling fewer bikes, and the stock is up 22%. And they say it's going to be based on these subscriptions, but if fewer users have, are kind of in their system and there are a few bikes out there, how does that
Well, and you have to
work?
see what they're going to be offering, right? So they're launching these Strength Fitness Plus in-app services, things that are separated from the hardware, right? So that's sort of why, off the top, I say there's been so much focus on pushing these bikes, pushing these treads, now a shift in focus away from that. And really, I think that's why with the expectation that there will be less movement in the holiday quarter, there's less concern from investors that that actually matters to their bottom line going forward.
And then just from a, I guess, big picture trading dynamic standpoint, this was once a $45 billion market cap company. Yeah. It's now up to $3 billion after really troughing at a, maybe this is not going to make it type of valuation. 18% of the shares were short, at last report. So in other words, people thought it was doomed, and now all of a sudden it's got a little bit of a glimmer of hope in there.
And you really see the height of the stock during the pandemic when everyone was working out from home. There was this idea that everyone was going to want to bike.
It peaked the moment the vaccine trials came through and said you can go outside.
And maybe it was a good strategy then, but now they have to figure out what long-term sustainability looks like for this company.
Excellent. Brandon, thank you so much.
Thanks.
Brandon Gomez.